Hi, everybody, and welcome to a Reserve Study Basics webinar. I'm Kevin Davis Insurance Marketing Manager, Sherry Branson. Today, you're going to learn how a community association reserve study can help keep insurance costs down. Please take a minute to read the disclaimer that's coming up on the screen right now. Please take a couple seconds to read that. And we'd also like you to relax today. The session is being recorded. You can take notes if you'd like to, but it's being recorded. And we put the recordings on our website, which is kdisonline.com, and also on the Association Reserves website, which is www.reservestudy.com. An outline will be emailed to all who filled out an end of session survey today. So please fill out the survey. We'd love to send you an outline of today's presentation. And we're also going to do a Q&A session at the end. So if you have any questions at all about the material that we go over today, it's going to be a very interesting presentation. Feel free to type your questions into the questions box, and I will come back on at the end of the webinar, and Robert and Kevin will be answering your questions. So ask as many questions as you'd like. And now I'm joined by the two main presenters in today's webinar, Mr. Kevin Davis, the founder and president of Kevin Davis Insurance, and Robert Nordlund, the founder and CEO of Association Reserves. Hi, Kevin, and hi, Robert.
Hey, Sherry.
Hi, Sherry.
Hi. Nice to see you, Kevin. Kevin's in Los Angeles and Robert is in California. I'm on the East Coast in Florida, so 3 hours apart, but we can see each other great. It looks nice and sunny out there in California. Beautiful weather.
Beautiful day. It's a beautiful day. Yes.
Great, great. And we finally have cool weather here in Florida. We hit the 50s the other day, so it's really dropped. So fall is here and winter's on the way, which is fantastic. I'm looking forward to the cooler weather. And today we have a great webinar, you guys, a great webinar topic. We're going to be covering lots of valuable information for people to think about and share with their customers. Can you talk a little bit about our goal today?
Sure. Thanks, Sherry. And I'm glad to be here. I'm glad to be with Robert again. It hasn't been that long, but we've been doing a lot of these things recently because we're starting to realize what's important out there. And our goal today is really discuss the importance of reserve studies for community association. You see, there's a major problem facing community associations today. After years of neglect and maintenance issues, many of these associations are in so much disrepair that it's unbelievable. And again, Surfside is one of the major causes right now that we're all focusing in on. But what's happening is that insurance providers are also taking notice right now, and it's impacting our rates, coverage limits, and insurability. So what we're saying now is reserve study is a tool to help plan for these future repairs. And without it, how can associations really even budget or do anything when we talk about deferred maintenance? So we hope that when we're done, our insurance agents and brokers out there really get an idea of what reserve study is all about. And so it can help us to really kind of keep insurance in the future. So with that said, let me turn this over to Robert right now, who can really kind of talk about reserve studies. Thanks a lot. And nice seeing you again, Sherry.
Nice seeing both of you. Yes, have a great webinar. Thanks, guys.
Thank you. Thanks.
Thank you.
Well, thanks, Kevin. It's a pleasure to be with you here today, sharing some of these ideas with the audience. And for an insurance audience, I just want to make sure we set the table correctly. And with community associations, the unique situation with this client is they're multi-million-dollar nonprofit entities, but they're run by an untrained volunteer board of directors. And so I think, well, what can go wrong with that? Untrained people running multi-million-dollar entities. Well, let's talk about what it looks like financially, because everything runs on the basis of the numbers, the budget and the numbers. With a well-balanced, financially and physically healthy association, usually about 75% of their budget is the operating, the daily, weekly, monthly expenses, management, janitorial, etc. The bills they get, they pay those bills. About 25% of their budget should be set aside towards reserves, offsetting the deterioration of their major assets, roofing, painting, asphalt, all those major things that are the common areas at the association. Now, what we find is that starting to get the evidence of the untrained board of directors is you see the quote on the right, "Clever me, look how much we can trim our assessments." And that's when board members are doing short-term thinking and focusing on just the size of their monthly assessments and not the needs of the association, because clearly the roofing, painting, asphalt, boilers, all those things are still there. So you wonder, well, what happens to these associations? Well, they get into a situation where it starts to become evident. The roof, paint, all those things still need to be repaired. And without the money to do them, the place starts to fall into disrepair. They don't have the money they need to maintain the property. They just haven't set it aside. So they've got this problem. Years of neglect, maybe small decisions, budget trimming, not setting enough aside, not paying that, what we call the deterioration bill. But you put all those things together and you get deferred maintenance and special assessments. And angry owners, how can this be? We were counting on not having to pay this extra bill, but it's ignoring the reality of those very real things. Well, what does it look like? It looks like boards that are failing to take care of the asphalt, sealing the asphalt, and letting it fall into complete failure, complete disrepair. Being a little penny, my mom would say, what was it? Now I can't even think about it. Something on pound foolish.
Yes, I know. Penny pound, and I can't think of it either.
Yeah, we can't think of it either. Anyway, focusing on the minutia, trying to be careful, but it ends up costing the association more money and unsightly. We get boards that are trying to save on their painting costs, thinking that, oh, gee, look how clever I am, saving on painting. And then when they do that, of course, they get into a situation where they not only have to hire a painter, they also now need to hire a carpenter with the additional deterioration. Same here with the ironwork, failing to take care of the obvious, painting the ironwork, all of a sudden it's failing, or it could be things that are just plain unsightly. This is a common area bathroom by a tennis court, pool and tennis court area. The board is just not paying attention. They're penny wise and pound foolish. That's what it is. And then you can get into situations where you just plain think it's comical. How can a board make the decisions that lead to this tennis court? It's been years since this court was playable, yet we have boards across the country that are making decisions like this, or decisions like this. I had to stage this picture carefully because there were Jaguars, BMWs, Mercedes, cars of that caliber in this underground parking garage. And you can see that the board was caring for the solution by just putting up gutters so the dripping wasn't falling on cars. They weren't fixing the actual problem. We're talking about ill-advised solutions to real problems. And then you get into some safety type issues. Look at this balcony here where it's literally starting to fall apart. How does this happen? Well, it's taking your eye off the ball, missing the target. This is a short wood bridge that I was on at one property. You can see that someone else has already punched through. I'm not a large man, and I was walking right on the structural line there to try to protect myself. And then, of course, we bring ourselves to the main topic of this year, and it's Champlain Towers South. In this situation, we have years of neglect and poor decisions, coupled perhaps with a marginal original design and perhaps maybe some shortcuts in the original construction. We'll learn more about that later. But you put those three things together and we have the loss of almost 100 lives. The point is that all those small board decisions matter. Failing to take good care of the property and taking your eye off the ball. And so this is a significant deal that we're talking about here today, what kind of decisions the boards make and how wise they are and what kind of informed decisions or lack of informed decisions they're making, leading the property forward.
Yeah, you know what? It's interesting you're saying, because from our point of view, from the insurance point of view, you know, deterioration is the enemy of the board of directors. That's true. Because if you think about it, all the challenges facing these community association boards, deterioration really has emerged right now as the single greatest problem you have. You're talking about, because of that, you got increased insurance costs, declining property values, and unit owner dissatisfaction. And right now, nobody is happy out there at all. And the reason is because they don't seem to deal with it. Either A, they don't budget correctly, and there's a fear out there of raising assessments. So they keep things low and they come back every year and say, guess what? We managed to keep our assessments low, when that's not the issue. The issue is budgeting correctly. And because they're not, they turn into the insurance policy, and let the insurance policy take care of their deterioration. And you have to understand that insurance is not a maintenance policy. It's not a maintenance policy. They believe it is, but it's not. It is an occurrence policy. So when that building went down, we know the occurrence date was the date that building went down, not the 10 years or the 15 years or the 30 years that neglect was there. And so you end up having these lawsuits where the deterioration of the unit, the deterioration of the property has been going on for years and years and years. And they sued the board, and they sued the individuals, and it's creating a major problem for insurers. The bigger problem right now is that for the first time, we see it's possible for 100 people to die in a situation where they're not underwriting, they're not thinking about. It's becoming a major problem for insurance providers right now. So they have to think about what it is they need to do. And what's happening right now, the insurer are realizing that they have the power, that they are the house. You know, when it comes to gambling, they're the house and they're going to win. Because there's one thing insurers don't have to do, and that is to insure. They can say, no, we're not going to insure these properties. And what's happening already, we're seeing changes being made from an insurance point of view. We're seeing change to the application, okay? We see questions in there, supplemental questions in there. Have you had a reserve study? Is it up to date? Have you had one in the last couple of years? Are you planning a special assessment? Any major project over $100,000? So we're seeing right now from insurance point of view, things happening out there. We're seeing limits being decreased. We're seeing from umbrella where you can easily get $100 million, $50 million. It's hard to get them. We know premiums are increasing. We're starting to get cancellations in certain parts of Florida. We're starting to see non-renewals go out certain parts of Florida because right now the insurers are realizing that they're focusing a lot of their attention right now on this whole, what's happening out there. And the board has to understand, they have to start focusing on that one important thing is that they have to maintain a common area. They have to do it because if they don't do it, insurance may not be there in the future, or it may be cost prohibitive. You just can't afford it. And that's one of the things that we're seeing constantly. And because of deferred maintenance out there, we're seeing trends. We're seeing some critical trends out there, some disturbing trends that, again, from the insurance point of view, we're concerned about. The first one, and especially in the older associations, a significant rise in the claims for failure to maintain. We're seeing entitlement attitudes of these unit owners out there where unit owners believe that they have the right to question the board's authority to act, where they get the authority from to make these decisions in terms of budgeting and reserving. And then social inflation. Social inflation right now is a major problem for insurers, which leads to something called nuclear verdicts. We see these billion-dollar judgments are out there, usually because there's a social issue out there in terms of social justice or lack of trust we have in the government overall. And a question from us, from an insurance point of view, how do we underwrite or rate for these situations right there? How do you handle these situations? That's the difficult part for us. How do you handle it? So when we talk about these issues right here, when we talk about these exposures, these unique exposures from community associations when it comes to failure to maintain, we worry about things like slip and fall, water damage, and breach of fiduciary duty. A fundamental duty of the board is to maintain and repair the common area. Now, this problem is magnified out there because, again, the board of directors out there and people who live there don't want to pay monthly fees. They don't want to increase. They don't want to fund the reserves. So as a result of that, we see more slip and falls. You see from leaky roofs, crumbling roads, parking, all the things you've seen, unsafe balconies, all the pictures that Robert showed earlier, that leads to slip and falls and dangers under the general liability. We all see lots of water damage claims, sewer backup, broken pipes, leaky appliances, all because of deferred maintenance. And the main one that, again, as us who specialize in the D&O, is the breach of fiduciary duty. Whenever you have a situation where the board of directors is not maintaining the common area, the first thing they would do is sue the board under the D&O for breach of fiduciary duty, because we know when you use the word breach of fiduciary duty, it's a D&O claim. However, understand the D&O policy, the GL policy is not designed for maintenance issues. So if you sue for failure to maintain a common area that led to property damage is not covered under your D&O policy. It may not be covered under GL policy also because there's no occurrence date. It's just deferred maintenance. So you have to understand that this is probably the number one area that we're seeing, that we're concerned about from an insurance point of view, because there are ways around these things and we're looking at to see, will they get around them? It is a major problem, failure to maintain. When you combine that with this entitlement attitude of the unit owners, because again, we talk about the fundamental duties is to maintain the common area. Another is to enforce the rules. The documents are outlined there, but you got the unit owners there who constantly are who's challenging those rules. They say the rules are unfair, they're discriminatory, they're unreasonable, they're unenforceable. And that attitude they have impacting budget, reserves, and maintenance problems. They don't want to reserve. They don't believe they have a right to reserve. And Robert, one of my favorite lines I hear in Florida all the time about reserves is that I don't even buy green bananas. You hear that, right? You know, and again, it's the entitlement attitude from the unit owners in there who believe that they have a right to do what they have to do in community associations. And I tell you, it's gotten worse from COVID because of one simple thing happening in COVID right now. We're living in our associations longer. So instead of going to work from 9 o'clock to come back at 5 or 6, you know, at 10 o'clock, I'm looking outside my window and seeing things I don't like, you know, but then I'm complaining about it because of all those pictures you said they're doing it. But then when we say we need a special assessment, they say, well, guess what? You know, it's the old board's responsibility, or we are not our responsibility, and they fight and they battle and nothing gets done. That is the bigger issue there. And to us, that big issue for us that we see from an insurance point of view is something called social inflation. All these things lead to social inflation. Social inflation is a term the insurers are using because the rising cost of insurance claims caused by social and economic trends resulting in more litigation and more larger jury awards. Now, what do I mean by that? Now, we talk about regular inflation. You look about our houses, okay? We bought our houses 10 years ago, and because of our inflation, it's worth more now than it was before. Well, the same thing's happening now to claims, okay? However, with social inflation, it's these larger claims are happening because of social and economic needs, meaning that there are social and economic trends there that are making a point. We have distrust for the government. We have distrust for corporations. We want justice done. So we don't like what's happening out there for me with the decisions they're making. We're holding them accountable. And so instead of, you know, $100,000 for slip and fall, that $100,000 now is turned into $250,000 or $500,000. You know, because the board should have done the job better. Because of their job, they should be more knowledgeable. And that's what's happening more now we've ever seen before. It is creating a huge problem for insurers because we don't know how to budget for these things. We don't know where to do it, how to underwrite it, because now all of a sudden a $300,000 award 5 or 6 years ago now is a $1.5 million because of social justice, because of people distrust for everybody is out there, and it's creating a major problem. And that's why for me right now, Robert, when we talk about reserve studies, it's really, really important. So let's talk, why don't you explain to me about reserve studies and how can reserve studies help?
Well, thanks, Kevin. Again, we're talking about the root problem is deferred maintenance. How do we help the boards make those wise decisions, make informed decisions to more effectively care for the property? How do we get them to be more like the shiny, sparkly association on the left and not so much like Aspen Creek on the right, that they're disorganized, sloppy, and mismanaged? And the point is, the key is a reserve study. And let me show you how that comes into place. For our audience today, you may have never heard of a reserve study. So let me spend just a few minutes and briefly explain. It's a recurring physical and financial budget study to help guide the association towards a successful future. It looks forward to the future, and it is a budget and a cash flow evaluation so they can see forward and see what they're getting into. Basically, with a reserve study, there's 3 results to every reserve study. It's a nice clear list of what upcoming projects are there in front of the association. So the board is informed of what they need to prepare for, what they need to provide for. So we like to say it's never good to be surprised by something that is not surprising. A roof is going to fail on schedule. Asphalt's going to fail on schedule. There's no reason for that type of a project to create an emergency. Second result is, do we have enough reserves on hand? How have we been doing in preparing for these existing predictable projects? And the third result is a recommendation for how much to be setting aside. So the board is not moving forward blindly, just wondering and being left to guess. So a reserve study guides boards towards the future. It is a perishable document. You can perhaps I encourage you to think of a banana or a avocado, that it goes out of date rather quickly because it's talking about what is the current condition of things and the current financial balance between the financial and the physical. So you need to regularly update the reserve study, get that fresh information, fresh guidance. When the board takes their eye off the ball and goes years and years and years without looking at a reserve study or refreshing it, then all of a sudden they find that they're off track. So success looks like regularly updating the reserve study, getting fresh information, and then taking action. Action is key. The board needs to fund reserves as recommended. As I showed earlier, a healthy association is often in the 25% of budget going towards reserves. If they're just down in the 10% or 5% range, that's not a healthy association. They're running themselves down into the ground. So they need to fund reserves and provide enough cash so that the projects can get done on time. And that's it. They need to spend the reserves. The cash is there. It's there to be spent. It's not to be hoarded. There's no prize for getting a reserve fund that is $1 million. The whole purpose of reserves is to spend it. And sometimes there's a question of, what do we spend it on? Well, a reserve study looks at the normal cyclical projects around the association, but you may have heard people casually talking about engineering reports. At Champlain Tower South, there was a 2018 engineering analysis that was done, part of the Florida law in those 2 counties, to get a structural evaluation when the building hits the 40-year point. Well, let me just show you how these 2 documents are different, but they're complementary. First off, an engineering report is done with different credentials. A reserve study is prepared by someone with an RS or a PRA. The conclusions from an engineering report are structural. A reserve study is all budget and cash management. Do you have enough cash? Will you have enough cash in 3 years to do your boiler replacement? The contents are different. They're defined by different standards. The cyclical projects, the normal cyclical things like painting, sealing the asphalt, replacing the carpet, totally ignored in an engineering or architectural report. But those are the fundamental projects that fuel what's going on, what the cash needs are, that's defined in a reserve study. There's clear intrusive or destructive testing in an engineering or an architectural report. That type of work is not done. Frequency for an engineering and architecture report is less frequent, every 5 or 10 years. There's some locations around the country that have specific requirements every 5 years. In California, there's a 9-year elevated exterior element inspection, wood structures, those types of things. Yet a reserve study, like I said, goes out of date much more quickly, depending on how the board has been setting funds aside, depending if they did the project, if the project happened on budget or off budget. You can see things get out of balance a lot quicker. And the cost, engineering and architectural report is often 10 times that of a reserve study. And every reserve study varies by property type. If it's a simple property, it's inexpensive. If it's a big and complex property, a 250 unit condo, 8 buildings, 13 elevators. You can see that that's very different from a nice little 6-unit condo on the beach somewhere. So what we're looking at is different documents, but let me make it clear that they work well together. There was that 2018, in the real life situation, the 2018 engineering report for Champlain Tower South that revealed a great deal of projects that need to happen. And when we were hired in 2020, this is why we have significant stake in this and why it touches our heart. We prepared the reserve study for Champlain Tower South in 2020, early 2020, right before COVID-19 pretty much shut everything down. And that was really unfortunate because we were informed by the engineering report, all those structural issues, and we were able to work them into the cash management for the reserve study. We designed a plan for Champlain Tower South to get to the future. But unfortunately, there's that lack of action. And they got caught waiting too long to implement the plan. And that resulted in the tragic loss of almost 100 people. So the engineering report or architectural report fuels the reserve study with some specific information. It may be things like balconies or spalling or a specific asphalt or air handler management issue. There's a number of different things that you get from those engineering reports, but it all informs a reserve study. And it comes back to the reserve study is key for guiding the board, providing them the cash management tool so they know what do we need to do to care for the association, giving them that, reminding them of that goal and giving them the information to be able to make that kind of informed decision.
You know, and I think that's the key, is that we need to give board of directors tools so they can really make better decisions right there. Because our goal is to see not another building go down. I mean, that's what we want to make sure that these boards of directors understand they have a fiduciary responsibility to maintain these buildings. And they have to budget, they have to plan, they have to reserve. The insurance part is secondary. The insurance part is saying that you got to do it or you won't have any insurance or it's going to be cost prohibitive. So you got to do something. And our job right here is simple, is to say, let's work together. Let's figure out a way to make something happen. And between us, we're willing to do something about it. So what we've done, and I'm really excited about this, is that we have teamed up to help our clients, our association clients, with an incentive to get a reserve study. That's what we're doing. And I'm happy about it. I know Robert's happy about it. And so what are we going to do? It's 2 parts to it. You know, part 1 is by selecting association reserves for your reserve study, your association will be eligible for discount on a reserve study from association reserve. Simple as that.
We want to make sure that the association has the incentive to get that reserve study and not wait and let that information get stale or miss the target, because knowing what to do will be the encouragement the board needs to be able to set the right amount of funds aside so they can readily make the repairs they need to make in a timely manner.
And that's so important, because without that, how do they know? I mean, you're looking at you look at all those pictures without a reserve study, how do they know how long these things are going to last? It's so important to get a reserve. To me, the reserve study is the ground floor. It's a starting place. You know, without that, you can't even, can you imagine trying to ride a bicycle without knowing what a bicycle even looks like, how can you, and that's the whole thing we're saying. You got to start from someplace. And again, if you get a reserve study from Association Reserve, they're willing to get a discount. If we find out that you have a reserve study done by Association Reserve, then we're willing to also give a discount on our insurance policies. So we're actually putting our money where our mouth is in the situation right there. We think it's so important and so valuable that we're willing to give, incentives to make sure it gets done, financial incentives to make sure stuff gets done.
Yeah, it's when Kevin, well, how do I even start? We know what needs to happen for associations. They need to budget well. They need to have the cash there so they are ready to take care of the property and not be continually surprised by things that are not surprising. And so if we can guide the association, encourage them towards having a reserve study, getting the proper insurance, that will help fuel a whole lot of very positive outcomes. And those positive outcomes are having sufficient funds to take care of the property. That minimizes the problems that Kevin mentioned earlier, the slips and falls, the deterioration issues. We haven't even talked about property values when they lose curb appeal due to the property not looking as nice. We showed that cartoon earlier, but we want to start to put the market forces together so that when associations are doing the right things, they are rewarded for it.
We're committed to this future. We're committed to making sure that they do minimize. We want to see deferred maintenance go down. And guess what will happen? The insurance cost goes down with it. The more deferred maintenance you have, the higher the rate's going to be for insurance. So if we're committed to doing that, if we want our associations out there to get a reserve study, just the basic, that's just the starting point. Because without that starting point, you can't go any further than that. So we're both committed to it.
Yeah, this is a nice package. It was great when Kevin came together with this idea and we ran with it. We put it together and we're pleased to offer it to the entire industry. And I think, Kevin, that brings us to the end of our prepared content for today's program. At this point in time, let me turn it over to Sherry, who will manage our Q&A time today. Sure.
Thanks a lot, Robert.